Good afternoon, traders, and welcome back once again to this week's Hot Stocks Outlook for November 24th, 2017. Hope you're all having an excellent week out there in the financial markets, but a lot to go ahead and cover. So let's go ahead and dig right in. We're going to start here with HollySys automation. So a lot going on in that automation space. Dean Foods, again, really a sector with a lot of these food and grocery companies doing quite well. We'll look at Kroger Foods as well. And Wendy's, so fast food, interesting things going on there in that particular stock. And we'll take a look at Nike shoes, which everyone should be well familiar with that company and that brand. But let's go ahead. We'll start here with HollySys automation and show you what we've been able to identify here with these daily bars and candles representing obviously all of our price data going back all the way to really mid-October. So a little bit over a month period of time here. And what we got is this crossover between the blue line and the black line that you see here on the chart. Now, these two values are very important to understand because the black line that you see, that's just a regular simple moving average. So it just really summarizes the past 10 or 15 trading days, plots them, and really is a reactive indicator, really lags and tells you where the market has already been. But what we're able to compare that to is this blue value on the chart. And that value is generated via the artificial intelligence found within this software program. And it's a predicted moving average. So it's forecasting prices looking forward through time because you want to make sure that you get into trends early. It really makes these things a lot more manageable for traders where they have a lot less risk on the trade, but a lot more opportunity to catch those bigger moves. Because if you get in a few days late, a lot of these things can change rather quickly in these markets. But what we're looking for is a crossover between these two values. So you see we get this all the way back in October saying this market's going to start trending up. Now, what can help you trade trends and manage these opportunities much more effectively is knowing when to expect short-term strength or weakness. And that's what this predicted neural index does. It's a highly accurate 48-hour indicator. So it's really only looking ahead 2 trading days at a time and then updating as time moves forward. So what traders are able to do is understand that, okay, well, the trend here is to the upside. You obviously want to take positions really only bullish in this market, be taking long positions. And what you're going to do is utilize this guidance from the neural index and also this predicted range. So you have really everything here as far as a price forecast of the overall trend, short-term strength or weakness, all the way down to intraday price levels that you can trade from. And you see that these are the actual predicted days, predicted ranges for all of these trading days before they occur. So when you understand all the way back here as it's time to go ahead and start getting long the market, you're coming in and buying at this level, buying at this level, buying at this level, and sticking with that trade when you recognize that the trend is still to the upside. So when we back out of all this and we see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 excellent entries in an uptrend. So for those shorter term traders, that's what you're going to be looking for, but able to just really hold on for the duration. And we see that from that first entry you get, this market has done very, very well. But it's really getting that good entry into the market, helping you deal with that sideways action and volatility at times. This market's up 19.5% in just the past 28 trading days. And you see, you would have been in this market for several weeks before some of these bids for like Rockwell Automation, some fundamental news and catalysts come into the market that really starts to propel some of these things. But you want to be along for the ride, and you just see how much strength is forecasted over this time period, saying, if anything, be long this market, ride this trend, and make sure you're around for that sort of move. As we move forward, let's go ahead and take a look here at Dean Foods. And I really wanted to highlight this for the shorter term traders, because when you have all of these tools, you can use them in really almost an infinite amount of trading styles and approaches, whether you want to trade options, day trade the shares, whatever you want to do. But we see here we'd gotten a crossover in Dean Foods. And just like the housing stocks from last week, you see a lot of these food companies, so companies that sell out of grocery stores that are really household names essentially. You see a lot of these getting rather bullish. And so you want to go in with these trading ranges and say, okay, well, where can I make a play on these sorts of companies and these stocks? And we see that, we get some volatility right after that crossover comes through, gapping up a little here. But if you're waiting for that, that particular price that you want to see, you can get all the way down to about $9.80 or so. The market shoots up from there, but you see just this range alone, really in one trading day is about 2.86%. The market from that point has gone up as much as 5.5%. So that's what it's all about, is utilizing these tools to identify this short-term strength and then go in and execute your trading strategy, whether that's riding the duration of the trend or just taking short-term profits and short-term gains, obviously making sure, again, that you're trading within an uptrend, and a very strong one. You see, with all this separation between that blue and the black line, says you really want to pay attention to this market, take advantage of these moves that we're getting, and getting a 5 or 6% really cushion on your entry into a trending market can certainly be very, very valuable for traders who want to hold on to those trades, take some short-term profits, but even hold on for the longer term. Moving on to Kroger here, let's go ahead and take away these lines. Same thing. So you're really looking for, obviously, markets that are in uptrends. We want to trade with that trend. We want to see this neural index confirming these crossovers when these situations come through. But you see Kroger here has moved up pretty significantly for a short period of time. Let's go ahead and bring this up. We've got about an 8, almost 9% move from when the crossover came through. But of course, you've got all of this great information provided from the daily ranges as well. So you're really prepared to go in there and say, okay, well, we want to be a buyer in these days. Even when this volatility comes in, you can go ahead and buy this market and be prepared to trade this market to the upside. But the forecast of the trend, came all the way back here, really at the beginning of November. And we've gotten some significant strength over the duration of this time period here. But you see, you get a little bit lower from these predicted lows, but look what's waiting here. So you definitely don't want to be short, want to be holding out on those long positions. And if you recognize these things all the way down at 21.20, 21.40, that's what's going to keep you in the market and help you deal with that volatility without taking on even more risk and having to run longer stop losses. So really nice opportunity there in Kroger. We'll see how that plays out. Wendy's here. So fast food, a little different from what we've seen in Dean and some of these beverage manufacturers recently. But a crossover really towards the end of October, saying this market is not some place where you want to be long. You definitely want to go ahead and take short positions. You can utilize these forecasts to hedge your portfolio, have some long positions, have some short positions. But of course, use the short-term forecasting found in this software to manage the positions effectively. So we again see here that once that crossover came through, you understand you want to be shorting at these levels, taking profit at these levels intraday. But you see just how many great entries you get once you say, okay, I've identified the trend direction. I'm going to come in and start trading this. And you have these great levels to really trade from all throughout the duration of your trade there. So over the course of this market so far, really nice move. We'll go ahead and see how long this has been going on here. Probably about a month of time of trading, but this market down over 10%. So, imagine taking some of these long positions, having a market where you're 10% on the short side of the market, a 10% cushion as far as riding that trend. You can trail your stops with the market, but making money to the short side and the downside. So if you get crazy volatility in the S&P 500, you're still going to be making money with the basket of trades that you're taking. Here in Nike shoes here, or Nike apparel, I guess, crossover to the upside all the way back in mid-October. So again, about a month period of time here. But again, we can bring up these predicted ranges. And that's what's really the great help here for traders to manage their positions over time, because that's really what you need to do. You never know when those big up moves are going to come in, like, these trading day here. You can never really predict the magnitude of those moves. But when you have a tool and an approach that's getting you into markets, making you aware of trend reversals at the appropriate times, and then able to manage the trade effectively, it's very, very powerful here. So you see over the course of Nike, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 excellent intraday entries into this uptrending market. And over the course of this trade, as you just stuck with the trade, we see this market's up 13, almost 14%. And still looking rather strong. I mean, you still got a lot of strength with the neural index, a lot of separation between these values, and definitely a place you want to have a position, but at the right time. All the way back at 52.50, if that's when you start buying this market, you're going to be doing very, very well and much more effectively adding to your position at these strategic levels and really pushing your winners and cutting your losers short, which is certainly the name of the game in trading markets. So as always, guys, thank you all for watching. Best of luck to the traders out there in the markets. Have a wonderful Thanksgiving weekend. And before I get off here, This is once again the Hot Stocks Outlook for November 24th, 2017. Thanks again, and bye for now.